right, I'd like to welcome onto the stage Carlos Teixeira. So Carlos joins us from Finastra. They are one of our diamond sponsors, so thank you very much to them for sponsoring this event. Carlos is the global industry principal from Finastra. I was reading through his bio, and it sounds like a great role he has there. It says providing executive advisory services regarding market trends and technology transformation across all areas of corporate banking on a global basis. So that sounds like a great job to have to keep some of the corporate banking sector up to date on what's going on in this space. So please welcome Carlos. Thank you.
Thank you. It sounds great, but makes me travel to some countries that we should not. Unfortunately, at least not now, for the time being. So, first of all, very good morning. It's a pleasure for me to be here and a pleasure to go through all the new way of traveling, right? Just landed last night. Now we cannot leave the plane until we all get fever meter, so we need to go individually until the plane is actually open to release the passengers. So it's actually interesting, and they do it again in 5 minutes later because we never know. We might got something until you get to the immigration, but that's the way of Africa, isn't it? And I've been doing Africa for 14 years now, and it's always a pleasure to be back. So I do have an interesting role within Finastra, which gets me exposed to innovations, which gets me exposed to new ways of doing business. And I think that nothing better than this particular event to talk about new ways of doing business, and in this case, focusing on working capital finance. Now, throughout all my travels, and sometimes I end up spending some time reading some stuff as well. It's interesting, just a couple of weeks I was reading an article, and I end up on this quote. A quote from Mariana Gomez de la Villa, the ING, which highlights the trend, or what we foresee blockchain being used within this particular market being trade finance, where they say it's being deeply disrupted. And my question is it really? As we've really changed the way we do trade finance today. Yes, we have changed some transactions, which we have published it in the different networks, and I'll talk about them in a later stage. But in reality today, whenever a corporate wants a trade finance transaction, he goes to his bank, or he goes online and requests it if he's lucky. And then later on, the bank will look to his credit rating, will provide him with a facility, and he'll issue a swift message to issue the trade finance. So you can agree or disagree, but before we go to agreeing or disagreeing to this quote, I would like to take you back in time. I would like to take you back to 2014. In 2014, Maersk has looked into a shipment of goods from, in this case, roses and some perishable articles from Kenya into Netherlands. And this shipment, its only shipment, took 34 days. This is the reality of, in 2004, of what trade finance or shipping goods was all about. As we look deeper into this particular transaction or shipment, they realized that there were 30 institutions involved: customs, banks, shipping companies, insurance brokers, and so on and so forth. 30 institutions. Around 100 people involved. The amount of people touching paper, going around. And within that, around 200 interactions, being by issuing a document, being by stamping a document, being just by pressing a pure button so that the goods are released in one of the ports or shipped on board the vessel. And they realized that 30% of the time, actually the goods were parked, waiting for these interactions to finish. 30% of the time in a single transaction represents around thousands or very large amounts of financing or working capital that are stopped. And when we look to optimizing working capital, when we look to the way that you can streamline your operations, for them this was a problem. When we talk about blockchain being an area looking for a problem or a technical layer looking for a problem, they found the problem. But the problem is that this particular problem, each one has his own view of it. It's like a bit like COVID. It transforms, it mutates. And as they look to the problem, they realize that actually we have the technology, a technology which is provided by multiple players. Corda, from the R3 area, which has their own smart contract built in. Then you have Hyperledger together with Ethereum and Quorum, and so on and so forth, and even private players that have created all their DLT technology. Now we have the technology, we have definitely a problem, so therefore let's all embark in creating some initiatives. And the list has longer than this, trust me. But in reality, you saw hundreds of initiatives. Voltron, which now is called Contour, Congo, Marco Polo with TradeIX, even Finacle through their trade system, but beyond that, WeTrade, and so on and so forth. Each one of them trying to tackle an individual problem, a lot of them overlapping, but in different technology. So when we talk about multiple technology, we need to bring back interoperability. And that's a bigger issue than the problem that we had in the beginning. Then you have some of them that are looking like TradeLens, looking actually in the back of Maersk initiative. They are actually looking into how can I finance the SME business, or even the MSME. Looking into how can I differentiate and at the same time finance the trade finance gap of trillions of dollars that exists within the industry. Hello Trade looking into how can I certify that from a trade perspective that we have no kids working on the farms, that actually this wood doesn't come from Amazonia in Brazil, and so on and so forth. And in reality, when you look to these problems, blockchain is the right technology, ensuring that everybody sees the origin. And just a while ago in the previous session, we were talking about that we change, we have a buyer, and then the next one comes and buys, and you lost trace unless you go to the back and you understand where was the origin of this particular goods. So Hello Trade has all that on the DLT technology. And then at the same time, we start talking about digitization. And as never before in working capital, we saw a movement around digitization across multiple players. And some of them, especially the first two, and by the way, they are not there by specific order, Bolero and SDocs, they were already a player in this market. They just provided now the functionality through multiple connections into other DLT players in order to feed their electronic bills of lading into their platform and therefore digitizing the process. But beyond that, having the full initiatives like the Camel One, which actually goes together with RE from Middle East on the back of one of the largest retail companies in Dubai, actually, where they actually provide all the financing to their suppliers through Voltron into Hong Kong, for example. And then you have initiatives in the likes of Enigio, where they actually go to the level of certifying paper and then converting it to digital or issuing it directly into digital, but allowing you to know who owns that document at any given time. And as it mutates throughout the working capital or throughout the supply chain, you know exactly where does that document sits from an ownership perspective, addressing a lot of the problems that the regulator foresees, addressing a lot of the problems that a bank normally has in terms of understanding who owns a document and at any given time, and where does that document sit. And these all initiatives were great because at the same time, they generated consortiums. As never before, we saw banks around the same table. Direct competitors agreeing in initiatives. And they were, again, this is not exhaust. There are many more than this. But by large, Voltron, followed by TradeIX with Marco Polo, and even WeTrade, and today TradeLens from that perspective, we do see them as gathering the more and more names, and at the same time, the more and more funding in order to provide the financing, or the necessary financing, to that infrastructure. Now, we have the technology, we have the initiatives. Everything needs to be digitized in order for us to be able to provide real-time assurance of where it sits. But we still haven't addressed one problem, which is the interoperability. And there's where the network of networks comes in. And that's where companies like ourselves, but also Trade Finance, and even the ICC through their digital standards initiative that they have started, are looking into how can we work together? How can we leverage each one of the benefits that each one individual platform brings to an organization and create actually interactions that allow us to, at any given time, to push data, receive information, and make the right decision at the right time. Because in reality, your customer, the corporate, he doesn't care where does the transaction go through. For him, he wants to make the right decision. He wants to understand where it sits. If it goes by SWIFT, if it goes by paper, if it goes by DLT, he doesn't really care. As long as he has the right data at the right time to make the right decision, and as long as he doesn't have a problem on his supply chain where, due to the delay approval of a transaction, he misses a manufacturing window. And when you look to all this, and when you bring everything together, this is what the future could look like.
Morning. How's life down on the farm?
Hi Tim. Well, good news and bad. So the good news is they can definitely double production from 50 to 100 tons.
Not bad.
Cost of credit here in Ghana, they reckon it will cost them about $500,000, but their banks only lend at silly rates.
Okay, just hold tight a moment. Let's see if we can help.
Tim, what can I do for you?
Harriet, so I need some help. The producer in Ghana just onboarded, Joyce Cocoa. They need to invest $500,000 US. Is there anything we can do to help them get the financing?
Sure, let's take a look. So your credit line increase has just come through, and you've just over $1 million available on your credit line. We don't know them well enough to extend credit, but may I suggest a letter of credit to present to their bank?
Great idea, let's do that.
You're a premium client, so we could have that LC ready for you in an hour.
Fantastic. Thanks, Ria. I'll let them know.
No problem.
Hi Tim.
Right. The bank's issuing an LC as we speak. Let them know that they can present it to their bank tomorrow to get the funding they need.
Oh, that's great news. They'll be delighted. I'll pass it on.
Now, technologically, this is all possible. The technology exists. It's a matter of leveraging the whole wider network in order to be able to gather the data, and at the same time being able to give the bank and your corporate the right data for him to make the right decision. And that's really where we've been focusing. That's really we as Finastra been looking into invest. Through the launch of FusionFabric.cloud, our platform, we are bringing fintechs, we are bringing the wider ecosystem in order to interact with us, in order to interact with banks like yourself. So we are the largest financial institution provider from a software vendor, and at the same time, we service 9,000 clients. So by exposing our back office layer, we are able to leverage every single connecting point from a workflow perspective to gather data from third-party systems. This has never before allows banks like yourself to be completely aware of where you sit when you make the decision. Me as a banker, long time ago, I always make decisions, they were right at that moment, because that's the data I had access to. Today, we have access to more and more data. And then there's the question of what I'm going to do with all this data and how can I assess it. And that's where the larger ecosystem comes into play with their own experience. So imagine that you're issuing a transaction, and any given time, you look to data. So Coriolis, for example, a fintech, they provide trade finance data. If you want to understand what's the price of cocoa, as you saw in the video, Coriolis will give it to you. And they will also give you what is the fluctuation of the goods in terms of a dollar price. And you can make a threshold and say, if I'm doing a transaction, which actually the price is above 20% or below 20% of the market price, I should ask myself, is this a real transaction? Right? And as you progress, you start looking to the other players in KYC onboarding, the likes of Teixeira, where they can analyze where does the company sits. And at the same time, are there more companies on the same address? Is it just a working office for multiple organizations or not? If not, might be a problem. But at the same time, do I have the company paying the company and at the same time the CEO of that company? What's that transaction for? And they can raise you the flag. And as you progress, you look to the transaction initiation, and we already cover all those from the likes of Contour, TradeIX, or even SAP Ariba from the ERP perspective, allowing you to provide streamlined services. And then moving into the digitization space, looking into provenance, so compend or trade stream, digitizing documents with OCR, machine learning, AI, and so on and so forth. Allowing you to progress from a financing perspective, being from internal systems or your self-financing, the likes of our back office systems, but at the same time leveraging maybe our LenderCom platform in the R3 from that side, or Demica from a pure supplier working capital finance point of view. Then you look to the asset distribution. Should I call Mitigram? I have these assets that I have on my book profile. Should I offload them and free me up a bit from a Basel perspective, and I can provide more financing to other transactions? Or from a logistics, connect with trade lens, or even DP World, in terms to understand where is the vessel. And depending on where the vessel sits, your interest or your risk profile actually decreases. Because if it is already on the delivery port, then you will understand that from a risk perspective, it's much shorter than actually if it's still sitting on the shipping area, and so on and so forth. So in reality, we look into providing the full connectivity across all the players so that at the end, not only you have booked the transaction properly on your back offices, following the regulator, and we understand that, but at the same time you have leveraged all the connectivity in order to help you within that process. Now, going back to the same quote as we had in the beginning, blockchain, for me, above all, and okay, it's actually an enabler. It has enabled companies to work together. It has enabled new technology to be put on board. Beyond blockchain, beyond DLT, we have now machine learning, we have AI, and beyond that now we have all these algorithms that are coming together to help you within your processing. And all this because we do understand that collaboration is actually the new innovation across banks, fintechs, and all the parties. Thank you.
Thank you, Carlos. Let's see if we give Carlos just some time for maybe 1 or 2 questions.
Yeah.
So are there any questions?
How are you?
I'm good, thank you.
A quick question, just with regards to blockchain technology. Do you see the need for LCs in the future, given blockchain has arrived?
Ooh, okay, so I do see the need in order to change the way we provide trade finance or LC's guarantees because of a data access, right? Especially on the guarantees and the new changes that are being introduced, helping to provide more visibility in terms of a guarantee particularly. So DLT, it's the right technology, but we still have a long way to go until the regulator accepts it. Still today we talk about cloud and data residency, and they still don't accept very well the cloud. Imagine more DLT technology where we don't really see where it sits because it's across all the nodes. We understand that from a regulator perspective that only who has, or part of the transaction from a smart contract perspective, you'll see the transaction, but the regulator is still not there from that side. I do see the need. Because if you look the way that the corporates have transformed, and because most of them have come from the retail space, which is very heavily digitized, I try not to go to my bank at all and do everything through the app, and I actually get upset if I cannot. So the corporates are getting to that point, and that's why we see such push to digitization, to adopting new technology, chatbots, conversational banking into the corporate banking space, which today still see very heavily paper-driven. So I do feel the need for that. Who is the right player? I don't know. I don't know. There's a lot of them. Each one of them has vertical, and so for example, Voltron or Contour, they have an amazing footprint. And quite honestly, if you get 3 players, which is HSBC, Standard Bank, and the likes of Bank of America or BNP Paribas, you're done for trade finance, isn't it? And they've done that, right? And then they have the other vertical where they look to adopt more technologies in terms to automate the processing. TradeLens is a very good welcomer in order to look from a supply chain perspective, but I think they should all work together. So today I still don't know who is the player, but is there a need? Absolutely. Thank you.
Thank you, thank you.